What's going on, traders? I hope you're all doing well. Welcome back to another video. In today's video, I just want to quickly break down a trade that I took today in the New York AM session on the NASDAQ. Uh, for transparency's sake and to prove that I actually took the trade, here are some screenshots of the analysis given beforehand in the lab, which is our private trading community. If you have interest in joining, you could see the description below. And now, without further ado, let's just get right into the analysis, okay? So, seeing as we have all the PA already played out, I'm just going to back up a little bit using the replay tool, and we'll kind of talk a little bit about how I came to the conclusion or came to the idea of taking the long in the AM session. So, first and foremost, what I like to do when I show up to the chart in the morning is just kind of quickly get a foundation for where we have already traded from and where we're likely to trade to next. So, first thing that I notice is that we actually had this sweep below this series of relative equal lows here. This is actually a session liquidity low of the lunch session from the previous day. What is also noted is that we actually formed SMT with YM at this lunch low. So this is actually a form of SMT with the lunch low. And then as a result, we actually expanded above this intermediate term high, forming this 15-minute and also an hourly breaker block. So I had reason to believe that we were likely to be in a bullish environment, and some areas in which I would be looking for price to target are, what stood out to me was the fact that we had all of these relative equal highs here, these multiple forms of failure swings. I see these as kind of like smooth edges, and I like to target these for draws on liquidity. So smooth edges. Now, a couple other things that I do to give a little bit more conviction and a little more confluence to my draws on liquidity is I like to use standard deviations to project where we could potentially distribute to. So some of these standard deviations that I'll use are obviously standard deviations of breaker blocks. As you can see, -2 and -2.5 standard deviations of this 15-minute breaker block takes us right up into these relative equal highs here. We have this PM session high, we have this AM session high, and we also have this London session high. I'll also note that there is previous daily high up above here, about 100 points above our initial draw. So we have this standard deviation projection here, and I'll just draw out a couple more because there's a load of standard deviation projections that land right near these highs. So there is the breaker. You can also see that we have from this low to the midnight opening price, you could see that -4 lines up perfectly with the -2, -2.5 of the breaker. And then you can also see that we have this standard deviation projection here, which is, this is the low measuring to the digital open. Now, these are different forms of standard deviations, which are a little different than your normal, breaker block projection. What I'm doing here is I'm essentially just measuring the wick of a higher time frame candle. So there are said to be, at least with ICT traders, there's said to be two different daily opening times. You have the digital opening time, which is the actual opening time of a daily candle. And then you have midnight open. So these are seen as two opening times of importance. And all I'm really doing is I am measuring the manipulation of the wick, right? If we deem a candle's wick to be the manipulation, which is also price trading below its opening price, and if we are anticipating an expansion candle to occur, then we can actually measure the wick low to the opening price and measure the wick and then get projections from there. And this is a very accurate way to project where a high time frame candle, can likely distribute to. So that's what I'm doing there. And as you can see, this projection here, the digital standard deviation, also lines up really nicely with the breaker projections and these highs. And you can see -4 is also resting just above the previous daily high as well. So I'll keep these two standard deviations up here just for analysis later on, and we can see how well they work. So going into the AM session, I didn't really have any sort of interest in longing from here, but I wanted to kind of get some if-then statements built in order to maybe capture a long setup during the open. So I had my draw. I had that we were likely reversing from here and going higher. Now it was just my job to see, okay, where can we likely reverse from or trade to and then expand, right? I wanted to see a retracement to then expand up into my draw on liquidity. And that came from just eyeing where previous session liquidity is, which right here, this is the most recent session liquidity level, and this is the London low. Now we have this London low here. It's also nested with the 15-minute breaker, and it's also nested with the digital opening price and the midnight opening price. So this area right here is actually where I wanted to see price trade down into. I wanted to see us form some sort of SMT with the London low, whether NASDAQ takes it or fails to take it, and then see an expansion from there. And I wanted this to occur right around 9:30 because this was going to be our next volatility driver or volatility injection that we can potentially see a manipulation lower to go higher. So all I was doing was waiting for the 9:30 open. And as we can see, here's 9:15. We're kind of making our way down here. And then I'm actually going to drop down to a lower time frame and talk about the trade here. So what I'm looking for is us to trade down into here, form some SMT, tag into a breaker, and expand. Very simple. 9:30 opens. So we haven't quite met the breaker block and the 1800 open quite yet, but what we did do is we actually formed SMT with YM at the London session low. So I actually had to improvise a little bit and understand that maybe we didn't need to trade into this 15-minute breaker and these opening prices. We had formed the SMT, and we were technically trading inside of a higher time frame breaker block as well here. You could see these up close candles are actually a breaker block as well. So I kind of abandoned my idea of needing to tag this 15-minute PD array and understand that if we had this SMT here, we're trading inside of discount of the overnight range. We're trading inside of this breaker block here. I was willing to kind of improvise and look for a buy opportunity from this low here. And what that needed to be was, all I needed to see was that we could form a 1-minute change in state of delivery or a breaker block formation above this high here. All I wanted to do was just wait and see what occurred. And immediately we're starting to see expansion up from this low when we form this SMT. So once we actually formed this closure above this high, that confirmed the breaker block for me. And I immediately wanted to draw the projections. And I could see that 2.5 actually lines up with my draws up above here, this being the previous daily high, this being kind of those smooth edges that I wanted to target. And then my entry was inside of the breaker right here. My stop loss goes at the low, and then I take it up into these highs here. And as you can see, we get a pretty swift expansion up into the draw on liquidity. And I actually closed my trade out up here at these smooth edges. And price did go on to take the previous daily high, and it did meet -4 standard deviations of that digital standard deviation, that digital open standard deviation projection, before reversing from there. So that is the trade from today. Very simple logic, guys. Very consistent analysis, very consistent confluences applied to every trade that I take. And it's very simple. I use the 15-minute chart as kind of my bellwether chart. It just allows me to see the higher time frame picture very well. And with that, I will use other concepts, obviously liquidity being very important, probably the most important part of my trading model, SMT, and breaker blocks to help guide me in the right direction. Obviously, standard deviation is going to be another key component and confluence that I use within my own trading as well. So I hope you found this breakdown insightful. I hope you learned something, and I appreciate you tuning in, and I will see you in the next video. Take care.